Rising interest rates may add $500 to your monthly mortgage payment. This increase can be a significant burden for first-time homebuyers who may already be struggling to make ends meet. But why should you keep watching this video? The answer is simple. Understanding how rising interest rates affect your mortgage payments can help you make informed decisions about your financial future. By the end of this video, you'll know the specific numbers behind rising interest rates, how they impact your mortgage payments, and what strategies you can use to mitigate this effect. We'll explore how to navigate these changes and make the most of your home buying experience. The first fee to consider is the origination fee, which can be padded by an average of 300% by banks, costing buyers $800 at closing alone. According to the Mortgage Bankers Association, a 1% increase in interest rates can increase monthly mortgage payments by $100 to $200 for a $200,000 loan. This means that a $500 per month increase in mortgage payments over the life of a 30-year loan could result in an additional $180,000 in payments. Research shows that first-time homebuyers are often unaware of the potential impact of rising interest rates on their mortgage payments. Data indicates that households with tight budgets may be particularly vulnerable to these changes. The Federal Reserve has stated that interest rates will continue to rise, which could further exacerbate the issue. Per IRS Publication 936, homeowners can deduct mortgage interest from their taxable income, but this may not be enough to offset the increased costs. The hidden detail is that rising interest rates can also affect the overall affordability of homes, making it more difficult for first-time buyers to enter the market. Most people don't realize that they can negotiate their mortgage rate with their lender, which could potentially save them thousands of dollars in interest payments over the life of the loan. The IRS won't tell you this, but you can also deduct points paid on your mortgage as a tax deduction. For example, imagine a household earning $80,000 per year with a $200,000 mortgage at 8% interest. If interest rates rise by 1%, their monthly mortgage payment could increase by $150. Over the life of the loan, this could result in an additional $54,000 in interest payments. Consider this scenario. A first-time homebuyer purchases a $250,000 home with a 20% down payment and a 30-year mortgage at 8% interest. If interest rates rise by 1%, their monthly mortgage payment could increase by $200. To mitigate this effect, they could consider making extra payments on their mortgage, which could save them thousands of dollars in interest payments over the life of the loan. Another option is to refinance their mortgage to a lower interest rate, which could also reduce their monthly payments. However, this may involve paying closing costs, which can range from 2–5% of the loan amount. According to the National Association of Realtors, the median home price in the United States is currently around $420,000 if you're a first-time homebuyer. It's essential to understand how rising interest rates can affect your mortgage payments and to explore strategies for mitigating this impact. By doing so, you can make informed decisions about your financial future and avoid potential pitfalls in the home buying process. If you want the full numbers and the implementation checklist, the deep version is in my book Hidden Mortgage Costs, link in the description. In conclusion, rising interest rates can have a significant impact on mortgage payments, especially for first-time homebuyers. By understanding how these changes can affect your monthly expenses and exploring strategies for mitigation, you can make informed decisions about your financial future. If this video helped you understand the impact of rising interest rates on your mortgage payments, hit subscribe. I'm covering the topic of refinancing in the next video, dropping soon. Ring the bell so you don't miss it. What's your biggest takeaway from this video? Smart buyers ask the right questions, keep asking.